Good day, traders. Hope you guys are good and welcome to this week's segment of our weekly market breakdowns. Without wasting any time, let's get straight into it. First of all, you can see that we're in this consolidation phase of this long-term downtrend, right? With that being said, I think the ultimate area that we're looking at is this area of liquidity and this area of liquidity. Now, as you're looking at this, you see that the market is stuck in between this range and it's in the mid-range, right? So from what we've learned, especially in the supply and demand curve video, anything goes when you're in the mid-range, right? Anything goes. If you haven't watched that video, the link to it will be in the description box below. Anyways, we also have this area of liquidity right here, right? So if you look at it, the market grabbed liquidity from this high, went into this order block, and that's what triggered the sell-off, right? Now, the point of interest, or the points of interest for me, are this demand zone over here. Now, if you looked at the video that I uploaded on supply and demand, or identifying best areas of supply and demand zones, you realize that this is not an ideal zone. Why? Because it has a wiki base. So if you look at this area right here, that's my second area of interest. My only problem with it is that there is no imbalance and it's already been tested once. Also, if we count this retest, so it's already being used up, right? For me, the only area that's left is the zone over here. So even though it does not have an imbalance, but it's only been tested once. You get it? So for me, an area that I should be looking at is this one over here. And also I'll note this area as a level of liquidity. Also this high over here, I'll note it as an area of liquidity, right? Meaning, we're not necessarily saying that the market will reverse from this area, but the market, let me just remove this. The market might grab liquidity and then use that liquidity to go to the downside, right? So for now, I think what I also see is that price has been correcting upwards or creating this new high, this structure over here. So what I think is happening is, I think that in the long run, yes, price is going down and we have this impulsive movement, and this is just a corrective pattern, right? So for us to confirm this corrective pattern, we actually have to get a breakout below this zone, right? Also, the market might retest this area as support for the last time before it goes down. So let's go to the lower time frames to see what's actually happening, right? So this is the trend line, especially this one. It's much more clear when you look at it from this time frame. We are testing this demand zone right now. Weekly demand. The only problem is that it's not nested within a higher time frame, a higher probability zone. So that's just something to keep in mind. Another thing is we have this fair value gaps right here. We have a hidden OB here. I think you'll see it when we go to the daily. Let me just label it. And this is the source of these fair value gaps. So this is the high probability supply zone. You get what I mean? So if this demand zone is strong enough to trigger buy orders, what I'm expecting now would be the market to at least fill in this gap before dropping to the downside, or the market going all the way to the upside before dropping down. But what we saw on the monthly is the longer term trend, right? So right now we're just fishing for what's happening in the short run, right? So another thing, if you look at the daily, we have this equal lows right here, where we know that the market is creating liquidity. So the market is currently stuck in between this range over here. And considering the fact that it hasn't really touched the trend line, the market has incentive to take out this liquidity, before going up. So that's the first scenario, according to me, because we have a trend line to touch, right? for the third touch. The market has incentive because of this area of liquidity to take this liquidity out before going up. That's the first scenario. The second scenario is you can see there's a fair value gap here. What we're waiting for is a break of structure and for the market to come back, and then we're going to go up. So this is the second scenario. On this hidden order block, you can see right here that we have this 3 staircase, which is a weak supply, but it's a supply regardless. I don't necessarily think that this supply will be enough to hold the price. So I'm gonna do this. I don't think that price is eventually is literally gonna add or reverse from it. I think we're gonna get a reaction, but not enough to have a change of sentiment, right? Another area that I'll be looking at is this supply zone over here, nested within a higher time frame structure, right? But yeah, we'll see what as time goes on what happens. If the market does break from this higher time frame demand zone, I'll tell you guys what to do, because that weekly zone is not nested within a higher time frame structure, and it's also counter trend if you think about it, right? But then yeah, these are my sentiments on GBPNZD. Let's move on to another pair. All right, now we are currently on GBPJPY. This is an update. Just going to start. This is the trade that we took. We tapped into profits. We filled in these orders, but I want to erase it so that we can analyze this from a fresh point of view. So if you look at the high time frame, still stuck in between this range over here. What for me is interesting is that the fact that we still have this area of liquidity. On a high time frame, let me just get it out of the way. We're still in an uptrend, right? We could be in a reaccumulation phase of that uptrend, meaning the market is still generating orders to be able to go higher, right? Because we know that on JPY, we are bearish in the long run, right? So all XX JPY pairs, from all the time that we've been monitoring, we know that in the long run, they are all bullish, right? So let's get that out of the way. So like I said, we stuck in between this range, and then we have this demand zone over here. I don't like how it looks because there is no imbalance, especially because of this wick over here. But ignoring that wick, we have that demand zone and it's currently in control. If you don't take that demand zone into consideration, at least consider the fact that we've grabbed liquidity from this low over here and the market is going up. I think it's approaching this level at least. What the market does when it reaches that level, we'll see as time goes. For now, this is what I see. Let's go to the lower time frame. Right. If you look right here, this is the grab of liquidity. As you can see, the market went and retested this mitigation block, so it didn't go all the way to this demand zone right here. And now it's approaching this level of supply. We know that the supply is confirmed because number one, it has this fair value gap. Number two, it has resulted in a break of structure, right? And number three, it has a strong basing candlestick, right? So that supply area for me is a barrier that price has to go through. And it's actually the determining zone on whether price is going to go up right now or not. So price might react from the supply zone and decide to drop until it takes out this downside liquidity. I'm talking about this downside liquidity, right? Or price might break through this supply zone and then go up. As it goes up, it will take out these equal highs over here. So there is incentive to take out those orders. There is incentive to take out those orders. And then there is a supply zone right there. But like I said, we are looking at breaking through this zone. So our take profit, if we get a break from these equal highs, will be right here, right? But if you look at current order flow, you'll see that we had a strong move or reaction from the zone, and then we had a temporary downward movement or downward momentum, which for me signals a correction. because it's counter trend. And then we had a breakout of that structure. And now we retested that structure and we continue into the upside. So if you look at the daily and the 4 hour, you'll see that we are in an uptrend, right? So there is a change of sentiment. What I want to see to confirm that this thing is actually going up, I want to see, number one, okay, let me do this. I want to see a break of the supply, right? And then number two, I want to see another strong bullish day. And I want to see the market taking liquidity from this equal highs, which is also consolidating away from the zone. And I want to see the market retesting that zone with a strong candlestick before I buy. You get what I mean? If you watched my video, especially on identifying areas of supply and demand, you'll understand that one of the things that we look for to confirm a zone is a break of structure, number one. Number two, a consolidation away from that zone, right? So yes, those are the two main things, a strong departure and a strong arrival, right? So I need the zone to be confirmed, meaning that if this zone is confirmed and if we take out this liquidity, then price might go back into the zone and then we might trade from it, right? But if you don't get that break of structure, nah, you know what I mean? So yes, there is incentive to take out the supply zone. I mean, this equal highs over here. There's incentive. Liquidity creates incentive for the market makers to take out stop hunts, right? That's what we know. So these are my thoughts and sentiments on GBPJPY. Let's move on to another pair. Another thing, or another pair that we should be looking at is GBPUSD. As you can see right now, we are in this range right here. And previously what I expected was a breakout from the supply zone, particularly because price has been spent. What we have seen in these past few weeks is that the market has been creating new lower highs and lower lows, breaking previous structure and all of those good stuff until we eventually got ourselves to this point, all right? So I think if you zoom in, we have a breaker structure right now. Now we're waiting for those works of return to another block, blah, 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 before we can continue. So if this continues, I think in the long run, we should be bearish on GBP USD, right? On the left, you can see that there is no imbalance. So there is no strong area of supply or demand, particularly demand in this context, that I believe that price will use in order to trigger buys. But we have this area of liquidity. Now, does this mean that I think price will go all the way down? Not really, but for now, that's a target, right? As you go to the weekly, our recent break of structure becomes much more clear. We recently had a break of structure there. And we had this gap over here. We have a strong departure away from the zone here. If you look at where it's located, especially in the context of a supply and demand curve, although it's not nested within a higher time frame structure, it's ideally located. And also the zone is confirmed because it has broken through this opposing demand as well. It has a strong departure in the form of a gap. So if everything serves me correctly, if what I'm seeing serves me correctly, I think in the coming week or weeks, we should expect a corrective movement to the upside. Also filling in this gap, I think we should have a corrective pattern, right? Going into this demand zone, supply zone, that's fresh. And then taking out that supply to trigger the sells, right? And what are we going to use? We're going to use the zone as our take profit. But yeah, anyways, these are my sentiments on GBP USD. Let's move on to another pair. After waiting for such a long time for price to move from here to here, we finally made it to our supply zone. right? Now, question on everybody's minds right now is, in the heat of what's happening around the world with the war and shit, what's next for the dollar? If you look at the technicals, I'm not sure about the fundamentals, but if you look at the technicals, we're in a supplier's territory. Supply is currently in control because the market has recently tested supply. And yeah, supply. Another thing that you should take into consideration is the fact that this supply zone has been used up. Like, even if you look at the basing candlesticks of this supply zone before it got retested, there is no imbalance. So I think it's mainly because of the fact that it's on a higher time frame that price was able to react from it, because the higher the time frame, the more reliable and strong those zones are. But that's the only thing that's working for it, right? If it was on a slower time frame, this thing would have easily gotten broken through. If you look at a recent price action, we've got a lot of wicks on this supply zone, right? Which for me suggests that the supply zone has been used up, right? So when we're talking about zones, we consider whether or not the zone is still valid. That's the one conversation. The second conversation is whether or not you should be trading from the zone. Those are two different conversations, right? And the ideal point when you're talking about those two concepts is whether or not they are aligned, whether or not they're saying the same thing. You want to trade zones that are valid and also are tradable. Those are two different concepts. If you go back to those videos, especially in the beginning stage of the of the smart money concept playlist, you'll know what I'm talking about, right? So a zone being confirmed and valid and a zone being tradable are two different conversations. So do I think the zone is tradable? No. The market has been going up. So it's still in a higher time frame uptrend, still in an uptrend. Recently though, you can see that, okay, there's this area of liquidity right here. So price has incentive to take it out. If the supply is indeed in control and wants to take out or wants to, so the conservative approach of me believing in this new shift in sentiment would be me getting a strong break from this low. So as long as the lows are respected, for me, the uptrend is still intact, right? If you check here, nested weekly supply is in control. We recently have a break or had a break of structure here. No imbalance, but we have this order block right here. So the zone is not a strong zone because the imbalance that it has formed have already been filled, but it's a zone worth noting. So for now, what I think will happen is I think the market will go down to test the zone unless it breaks through the zone and takes out that liquidity. Those are the two scenarios that I see on the dollar index. But I hope you get everything that I'm saying. The higher time frame, though, the weekly uptrend is still intact for as long as this uptrend or this low hasn't been taken out. You also see that this low then creates incentive because it's an area of liquidity, right? So let's go to the daily. You'll see that there's this failure swing right here. And what we're looking for, especially for confirmation, is for a break of structure. So this failure swing is not confirmed until you have a break of structure below the zone. If you get that break of structure, this means that this was a mitigation and the market will retest this as a mitigation block until it goes to the downside, right? But then if the market breaks through the zone, it will then test the zone right here as an order block and then use it to go up. Those are the two scenarios. Anyways, I want to end this here. Hope you guys enjoyed it. Hope you found it useful. If you still haven't subscribed, subscribe to the channel, and I'll see you guys in the next video. Peace.